Hi, this is Steve Nison. Welcome to our next edition of Highlights, our educational newsletter for the candlecharts.com family. Today we're going to be doing something brand new, and we're going to be looking at candlesticks and sectors. I want to discuss the bank index. We know the problem a lot of the banking stocks have had recently, and I want to show you if you had been watching the bank sector back in September, we would have gotten a heads up of potential problems to come. So let's start with this tall white real body. Now, this tall white real body is showing us the bulls are in charge. Now, is the market at resistance here on this tall white real body? And the answer is yes. There's a resistance area here from early and mid-August. Okay, but although the market's at resistance, the index is at resistance, there's no turning signals yet. Now let's go to the next session. Okay, based on this last candle session, okay, what two aspects would get you nervous? And as shown here, I'm giving you a small hint. One is a candlestick signal, and the other is a Western signal. So if you want to think about this for a few seconds or a couple of minutes, just put the player control and pause. And then when you think you know the answer, and or you want to hear me give the answer, just hit play again. So the candle signal on this blue arrow is a small real body. The Japanese call it a spinning top. And this is not a shooting star, by the way, for those familiar with the candlestick essentials. A shooting star indeed has a long upper shadow, small real body at the bottom end of the trading range. This lower shadow is a little too long to define this as a shooting star, but nonetheless, it's a small real body. And this is one of the powerful aspects of candles. It's not only the price it's at, but the shape of the candlestick line. So although this is a new high for this particular move, okay, the small real body is showing us that the market is more in a tug of war and to be cautious. And then the Western signal, as I mentioned before in the prior slide, the market's at resistance. So certainly reason for caution. And then the next session, as shown here, anything else new? And the answer is, with that black real body wrapping around the white real body all together, bearish engulfing pattern. And remember, an engulfing pattern, all that need happen is real body wrap around real body. The black real body does not have to wrap around the shadows. And this is a pretty classic bearish engulfing pattern because the first candle is a small white candle showing us the prior trend is losing steam, and the second candle is a black real body many times the size of the white real body. So an important turning signal. Now, the market, and by the way, I just highlighted the bearish engulfing pattern here. So there's that bearish engulfing pattern, and the market descended. And over here we have a little bullish engulfing pattern. In the indexes, it's okay if the opening and closing are the same for the engulfing pattern. And also for the engulfing pattern, even if the first day is a doji, it's fine. The market built a little support area over here. And this is not quite a hammer, almost, but the hammer, the lower shadow, should be twice the height of the real body, and it wasn't quite twice the height of the real body. So here we had a bullish engulfing pattern, below the bullish engulfing pattern of support. So the market held support there and rallied. And let's look at something interesting. As the market was moving up to this resistance area defined back in August, and again here mid and early August and late August, and again with a bearish engulfing pattern in mid-September, as the market was moving up, what was happening? What are those shadows showing us? There was a series of upper shadows. So although the market was moving up, the real bodies were relatively small. And even with a somewhat longish white real body, that long upper shadow, along with the other upper shadows, is showing us the market is really struggling to move higher. And lo and behold, right at the resistance area, look what happened. So essentially, by watching the bank index, the sector, you could have gotten a real warning, especially when the market started to stall at resistance here and started to turn down, that there were potential problems. We essentially had a triple top here, and one of the resistance area, or quadruple top, because actually the market had resistance back here in August. I'm not showing it on this slide, and reinforced with the candles with the bearish engulfing pattern. So this is valuable information, and even though you really can't trade on the indexes, why is this valuable? Because by looking at the sectors, you can get a real sense of potential problems in the component stocks of that sector. So, for example, back in September, Bank of America was at 53. It's now 40. JP Morgan Chase was 48. It's now 40. And, of course, Citibank or Citigroup. I'm an old timer. I still call it Citibank. Citigroup back in September was 50, and now it's 28. So, of course, not all the component stocks in this particular index got hit as hard, but the sectors are a great tool to give you a heads up on potential turns in the component stocks.